Back in July last year, the European Commission submitted a number of proposals that overhaul the European payments industry. Now, we at Visa Europe, we do support and we are in favor of a much more integrated European payments market. What we did was actually compare their proposals to what we believe to be the principles, or should be the principles, for good European regulation. Now, the outcome of that is that we believe there's a few issues which have to do with market distortion and also unintended consequences for end users like retailers and consumers. Well, fair and open competition benefits everyone, and that's why the proposals have to enable a level playing field. Now, when we look at them, we see a few issues there. First of all, three-party systems are excluded from most of the provisions in the regulation, and that in itself will distort the market. And secondly, the European Parliament agreed to include commercial cards in the regulation, but only for four-party systems. Now, that will have a detrimental effect on small businesses who need those cards as payers and as payees. And of course, as and when their banks would withdraw from that business by lack of business case, they would have much less payment options. Consumers and businesses want innovative payments, but they have to be secure, they have to be fairly priced, and they have to be convenient. Now, the proposed reduced interchange rate may no longer allow the European payments industry to make the necessary structural investments to make that happen. Now, the effect of that could be quite big in terms of job creation in Europe, but also the risk that Europe could fall behind the rest of the world in terms of innovation, but also the overall objective of modernizing the economy. Well, consumers and merchants alike want to feel safe when they pay or when they are being paid. Now, strong authentication is not always the right answer there. We believe that merchants and payment service providers should be allowed to take a risk-based approach and find the proper balance between the need for convenience and, of course, the need for security. Making payments should also be made easy and transparent. Now, forced co-badging of different schemes on one card would create confusion and create lack of clarity for consumers and merchants, for instance, when checking out at the till in a supermarket. Moreover, it would have an effect on competition and on innovation. The Commission wants to create a more competitive and more open processing market, which is an objective that we support. Now, legal separation, forced legal separation of schemes and processing is actually the wrong remedy for that rightful problem. We have lots of evidence from various markets in Europe who have legally separated scheme from processing that the market has not become more competitive since then. The proposal whereby interchange rates for cross-border acquired transactions will depend on the acquirer country would lead to a patchwork of rates all over Europe, which is inconsistent with the integration objective. It will also have a negative effect on government tax revenues in many EU member states. With the four principles in mind, we urge European lawmakers to carefully consider and improve the proposals to avoid any unintended consequences and adverse effects for European citizens. Europe cannot miss the opportunity to establish a clear and balanced regulatory framework that promotes electronic payments. This is crucial for the European growth agenda.